A mammoth project with the potential to transform Africa's energy landscape. That's the Dangote Refinery project. The suspense surrounding the launch of this mega project may finally be coming to an end, as Africa's largest industrial project is set to launch this Monday, May 22, with Nigeria's President Muhammadu Buhari there to inaugurate it. The 650,000 barrel per day refinery is based on the Lekki Peninsula east of Lagos. The project, 7 times the size of Victoria Island, a main commercial hub in Nigeria's capital, has 130 kilometers of roads linking a series of complex units. Now, sub-Saharan Africa currently needs to import about 700,000 barrels a day of diesel to meet its daily need. If everything goes according to plan, the $19 billion facility, some expect will meet 100% of Nigeria's requirement of all refined products and also have a surplus of each of these products for export. However, the project has been delayed for a multiplicity of reasons. With South Africa losing a huge percentage of its refining capacity recently, the refining capacity on the continent as a whole has diminished considerably, with about 80% of the continent's diesel needs still being imported. So it's clear that the launch of the refinery is key to helping plug gaps in Africa's refined oil landscape. Well, to make sense of some of these issues today in the studio and to discuss the impact of the refinery on the economic and energy landscape, first is Bismarck Rewane, a renowned economist and Managing Director and CEO of Financial Derivatives Company Limited. Thanks for joining us today in the studio, Mr. Rewane. Great to have you, as always. Now, we briefly talked about this before coming on.
Yes.
Is the Dangote Refinery going to be the panacea for Nigeria's economic, or if you like, energy sector problems? Help us put some perspective on this.
Well, I think the way to understand this is to, first of all, clear the myths. There are a lot of myths and stereotypes. Dangote Refinery is a Hail Mary pass that will solve Nigeria's numerous and myriad problems. One, that is not true. The Dangote Refinery is a major milestone on the path towards achieving macroeconomic stability. But it is not all. In other words, it's a necessary condition, but it's not sufficient to do all of it. Okay, that's not number one. Number two is that it's a $19 billion project. And you just alluded to the fact that South Africa's refining capacity has been mostly shut in. The new concept of refineries is about hub. The hub, the only refinery of this magnitude, first and foremost, the largest single train refinery in the world today. The hubs that we know are Mexico, Houston, Singapore, Rotterdam, and so on, and 1 or 2 in India. Now, this refinery is going to serve basically the whole of West Africa and Central Africa, so to speak. Now, there's also a myth that once this refinery kicks in, Nigeria's foreign exchange problems in terms of the overvaluation of the naira will be solved. No, that is not correct. The reality is that what we do today is to swap crude that we would have refined domestically through the traders, and then they refine it and bring the products in. Therefore, what you give up, the export earnings of the crude, right, which you would have used to pay for the imported refined products, you are swapping it. So what happens here is that we will refine domestically, we will save the logistics of taking the crude out and bringing it in, and there will be constant availability. So I think that's number two. Therefore, it doesn't have a direct impact really on the exchange rate, but it will have an indirect impact because Dangote will be exporting the surplus after meeting the Nigerian needs, which are, in fairness, grossly exaggerated. So if that is the case, and that we actually use only about 200 or 300,000 barrels a day, then there'll be another 200 or so, if not more than 300, to export.
Yeah.
Okay?
Yeah.
So I think that's another thing that needs to be. But to me, the most important thing is that Nigeria has suffered over the past 3 decades from negative labor productivity growth and to a large extent negative total factor productivity growth, which means that the resources of Nigeria, both human and to a large extent material, are underutilized, are suboptimal. And one of the reasons of this is because of the bottlenecks. People spend half of their time trying to queue up for petrol, queue up for everything, because it's a bottleneck economy. If you, with one particular project, debottleneck a particular sector, i.e. crude, refining, and so on, you would have actually increased the probability of having higher productivity, both human productivity, labor productivity, and resource, capital stock productivity significantly. Therefore, you could see, maybe down the road, a spike in GDP growth, maybe from 2-3% averagely to around 4-5%, because of the debottlenecking of this particular sector, which is critical to Nigeria's economic fortunes.
Yeah. Indeed, and thanks for laying out some of the key issues. But one of the things that we've seen is that there's been quite a lot of expectation around what this would mean for other parts of the economy. We haven't even got to perhaps some of the environmental issues around it. But in terms of the positioning of this refinery as being able to enable job creation and some of the ancillary benefits and indirect job creation, how would you assess even the process of constructing and developing the refinery, turning it into this mega project that's meant to enable and be a catalyst for other types of infrastructure? Do you think even up to now we've seen that actual contribution to economic development?
I think there are two issues here. One is the real productivity impact in terms of having a project grounded and developing a project, formulating things. The second part is that the signaling effect that somebody, an entrepreneur, right, has the confidence to commit such significant resource to this market. And if what is he seeing, or what is the Dangote group seeing that others are not seeing? If you go back and rewind, you find that he saw that opportunity in cement and did it, and that was a big success. He has seen this opportunity here and is committing resources to it. So will others now see in other sectors, not necessarily in refining, will others see opportunities in this market that, in spite of all these stories of doom and gloom, that beneath all of this, there's a big, massive consumer market in Nigeria. So I think that's the first and most important thing, distinguishing between the direct impact in terms of goods and services and the psychological impact in terms of the mental capacity to take risks for Nigeria, and that if you take risks in a sector, or any sector for that matter, that is critical to the needs of the people, you are bound to succeed. I think that's the most important thing. But having said that, there are the environmental issues, and there's the danger that as we move into the renewable energy space and the obsolescence of crude oil, but that's going to take a long time before crude oil comes. So if you go back in economic history, the iron and coal, the iron and steel industrial revolution, it took almost 300 to 400 years before Newcastle and others actually became obsolete. So I would imagine that for Nigeria or oil-producing countries, both in the upstream, downstream, and midstream, there's still a long way to go. So the fears that, why are you investing in a technology that is going to become obsolete, I think are a bit are exaggerated for now, but the fears still exist. And so that is it. But oil is the golden goose for Nigeria. And you've got to tap it, and you've got to utilize that and harvest it now. And then the question is, what are you doing with the funds or the revenues that come from it? If you use it wisely, right, then there's a future. If you use it stupidly, then that'll be another missed opportunity. And Nigeria, quite frankly, cannot afford missed opportunities at this time.
You mentioned the signaling, but someone might look at this and argue two things. First of all, Dangote is a local investor. He probably has a higher risk appetite than your standard investor. And then the second thing is that the refinery is actually located in the free trade zone, which has other economic and investment incentives. So perhaps the signaling of what it would take to actually develop a refinery in a country, an environment like this, is probably slightly skewed because of those dynamics. I mean, what do you make of this? Is there scope to develop these types of large-scale mega projects in an economy like Nigeria, given all the challenges we even know that the refinery has faced and continues to face in order to come online?
I'm happy that you mentioned the fact of a free trade zone and all of that. But a country like Nigeria has a horrible reputation in terms of sanctity of contracts. So I'm not sure that investors are carried away by things, this concept of free trade zone, and Nigeria would honor its obligations. Nigeria will go to arbitration and meet its. We know what has happened to the Azura project, and there was a default not long ago, a few days back. And therefore, when you have a reputation for being for not being honorable, right? Even you can design all the things you like, nobody's going to take you seriously. So I take the point that Dangote is Nigerian, but Dangote, like Tata and many of these Ambani group in it, they are no longer domestic investors. They are multinational, or how would I put it? Their interests transcend borders. On Monday, they're going to have at least 5 or 6 presidents of African countries coming in for the commissioning. Not because of anything, because that's the wider market. So, but somebody has to lead the way.
Yeah.
And I think that leadership will help in sending a right signal to people that if Nigerians or a Nigerian can put his money where his mouth is, then maybe I'll take another look.
Yeah, of course. Of course, you sort of alluded to this before, and the perception is that because we have to import huge amounts of refined products now, there's a huge FX burden. But I think we want to understand a bit more the dynamics of the trading that would occur in a free trade zone.
Yes.
Would the products and the throughput from the refinery be bought and purchased in dollars, and that would still continue to mean huge demand for dollars in the domestic economy, would it not?
Yes. Either you purchase in dollars or you purchase it in crude,
with crude, with swap.
Right. Swap it, right?
Yes.
So you could say the swap now takes place in Nigeria, right? But it doesn't matter. If you give the Dangote refinery 300,000 barrels of oil, right, which you would have sold for dollars, and Dangote, you pay Dangote process it for you.
Yeah.
So Dangote buys in dollars and sells it back to you in dollars, right? So that
it's netted out the effect.
So it has no impact. What we should be looking at is if Dangote buys 500,000 barrels of oil, uses 300,000 barrels for domestic, and then exports 200,000 barrels of finished products to Ghana, Togo,
surrounding countries. Yeah.
Then those dollars become export earnings. And in the value chain, you get more for exporting refined products. Than exporting crude. So that becomes a net positive for Nigeria. But what people must not get away from are 2 things. 1, this is not going to solve all your problems. 2, that the price at which you are going to be buying refined products will not change. Therefore, if the landed cost of a liter of petrol is now, let us say $1, right? And the exchange rate you are using is X. You'll find that the landed cost of a liter of crude in Accra, in Cotonou and Lagos will have to be the same. And you're talking about something like almost 600 naira a liter, if not 700 naira a liter. Can you afford this? And if not, who is going to be paying for this? Right? Dangote is a businessman. It's not a charitable organization. So he would price it. If not, it will shut down. Yeah,
interesting. We're told we have to take a short break now, but we'll continue the discussion on this after. We've been speaking to Bismarck Rewane.